It's a privilege having you join us on the business segment of Midday Live. My name is Kweku Tim. This afternoon we talk about funding, we get into other issues on energy, and then we ensure that you get the business of updates in the country today. Let's get to the bottom of our stories. Now, the Public Interest and Accountability Committee has asked the Ministry of Finance to return more than 200 million it withdrew illegitimately from the Ghana Stabilization Fund. Well, PIAC, which was established by an act of parliament to monitor compliance of the Petroleum Revenue Management Act by both state and non-state institutions, said the finance ministry creamed off millions of cedis from the stabilization fund without parliamentary approval. So of course they are not too happy that this has happened. Well, we'll shortly be joined on the line by Dr. John Gachi, who is with the University of Cape Coast. A very good afternoon, Dr. John Gachi. Let me say congratulations for securing your doctorate if you're on the line. Thank you for joining us. First of all, now PIAC is asking that the Ministry of Finance return the amount they creamed off. Let me find out from you, is this possible? Are they capable of returning the amount, John?
Well, first of all, we need to establish whether the Ministry of Finance has indeed agreed that he has breached any law in terms of the utilization of that money. Because if you go to Parliament with a document enshrined in the budget, it becomes a whole. So, having informed Parliament that there was going to be a cap of $250 million in the stabilization fund for investment and the excess utilized for various purposes outlined in the budget, and that whole budget was approved by Parliament. One will ask, if there is excess thereafter, do you have to go to Parliament before you utilize the excess?
Of course.
Or having approved the statement you sent to Parliament in the whole document meant that the area that you have indicated in the same budget which was approved allows you to utilize it. So if those clarifications are clear, especially from Minister of Finance point of view and from Parliament, then we know that a breach has been committed. And if that breach has been committed, I do not know whether transferring that money is the best thing, because already the cap which Parliament has approved is 250, and we cannot send excess money back to that account because we have already reached the cap. So I think if indeed they are breached, then there should be internal discussion as to how that should be treated. But we should be very careful that we do not breach the laws governing the utilization of oil money. That is something that we need to be very firm about in terms of accountability.
Definitely. Now, John, this was indeed a question I was coming to, because then I was thinking, I have a cap to reach 250 million, and then I reach it. I have needs in the economy that I need to satisfy. I have other areas I need to critically look up to. Now, as a finance lecturer, I want to find out from you, in your opinion, if you are advising government, do you think they have erred in the first place?
Well, we need to talk in terms of what the regulations are there for. If you look at the Stabilization Fund and the statement in the Petroleum Revenue Management Act, it is very clear that unless you have about serious shortfall in petroleum crude prices internationally, or production fall significantly beyond a certain level, for which the earmark amount to support the budget would drastically fall within a quarter, you may be having financial difficulty, but you are not allowed to utilize it. So the condition to trigger utilization of money from stabilization fund have not been triggered. So from that perspective, one is not allowed. But if you look at proper management of an economy, will you have money somewhere that you can utilize to deal with the situation you face?
That's
and
right.
Keep the money there and be crying there. No serious manager would do that. So that is why I say, if indeed they utilize the money, I do not foresee a situation where that money will ever be transferred back to the stabilization fund. We can address this. Should rather trigger a situation as to how we should fine-tune the conditions attached to the utilization of the stabilization fund. Of course, the rest of the money is supposed to be sent to the contingency fund. So we should also be asking, if the money is supposed to be sent to contingency fund, is the minister supposed to just go and open the contingency fund and utilize, or it should go back to Parliament? I think that is what we should be discussing. And for me, from management point of view, we should rather forget about the transfer of the money back to the stabilization fund, because that cannot happen. And we should rather address the issue of how money will be utilized from the contingency fund.
All right, Dr. John Gachi, in very few words, from what you're saying, would you then call for a review of all the laws guiding the stabilization fund, so that in the near future, posterity could get a clearer understanding in case the cap is up and we need to look elsewhere?
The issue is not about the cap. The issue is what should trigger the utilization of money from the stabilization fund.
So would you call for a review?
As it is right now, it is very tight. Nobody can use it.
That's right.
But there should be a review of the stabilization fund, not only the stabilization, but the heritage fund also, where we should even invest that money, that cap 250. Why do we invest it? Don't we have investment opportunities? Don't we have to follow investment principle where we invest some of the money here in Ghana and the rest outside the country to bring about what we call the benefit of a portfolio diversification internationally?
Obviously.
That is what I think we should bring to bear in the management of stabilization fund and the heritage fund.
And I quite agree with you on that, Dr. John Gachi. Sincerely, we're grateful for having you on our network this afternoon. Let's look at other stories now. And here, the Jubilee partners have also far fled 1,091.8 million cubic feet of gas between June and July. This exceeds the 500 million a month threshold, but the director in charge of oil and gas, Kojo Agbeno Efunam, says this could be explained. He indicates that partners are allowed to flare some gas during production, making up the over 1,000 million cubic feet of gas that has been flared so far. Meanwhile, the Ghana Gas project is just around 99% complete. If you just joined us, you're still live on a Midday Live, and we're bringing you up to speed on some of the latest business stories that we have now. Executive Director of the Center for Freedom and Accuracy, Andrew Awini, is calling for investigations into challenges facing the economy. He maintains persons found culpable of the inherent difficulties should be held accountable before considering IMF bailout as a case maybe.
How did we get here? Is anybody taking responsibility? Shouldn't somebody honestly, sincerely own up for bringing all of us to this level of disgrace? That's the way I think we should be looking at it for now. There are three that are very, very strong that we are all aware of. One is the depreciating cedi. Some people have suggested that in 1 year the cedi has depreciated by about 40%. Now somebody is responsible for managing the currency. Now we are also told that one of the biggest problems we have is the deficit. In fact, it is the $4 billion deficit that has led us to where we are today. If you will recall, in the last quarter of 2012, we overspent our budget by $4 billion. That was a deliberate action taken by a group of people that has dug a serious hole in the economy.
All right, so he's talked about some few things, talking about Mr. Awuni, and one is the depreciating CD. So let us shift us into some currency matters. And here the Ghana cedi has remained at 3.03 to the US dollar on the interbank market for over 14 consecutive sessions. Well, in this News Desk report, we take a critical look at the cedi's performance 6 months after the BOG measures on the interbank market.
Financial analysis shows that the cedi has, in the past 1 month, seen some recovery and begun to appreciate against some major currencies. This is based on data provided by the Bank of Ghana. The cedi depreciated to about 27% to major trading currencies from the beginning of the year, and about 21% after the introduction of the new foreign exchange rules on February 4. For the cedi against the euro, the rate of depreciation slowed down from 6.37% to 6.35% in the first month. It depreciated against the euro by about 25% from the beginning of the year. The Ghana cedi further depreciated against the British pound by about 28.43% from the beginning of the year. Data from the Forex bureaus, however, shows the cedi has depreciated by about 2.7% to the US dollar, 2.5% to the pound, and about 2.9% to the euro in the past 1 month. The cedi on the Forex market has depreciated by about 31%. In the face of these analyses, the Bank of Ghana says it will continue to find measures to halt the free fall of the cedi.